SBF just indicted for bribing Chinese officials to the tune of tens of millions of dollars. Was it all an FTT token? This is Around the Blockchain. Thank you for joining. Make sure you go ahead, hit that like button, do it right now. We got a great show with some great guests lined up. We're going to get right into it. We have from the BitLab Academy, not Dexter. We are talking about Kelly Kellam. How are you doing in the laboratory?
I'm doing good. I'm just, cooking up some sauce with all these charts to figure out how to navigate the systemic failures, which is looking like that's what Bitcoin was made for. I'm looking forward to getting into it. How you doing?
All right. Well, you said you're working with some concoctions, some chemicals. I see a beaker behind you. Now I'm a little bit worried. Let's make sure we drug test them. All right. Also on today's episode, we have Caleb Franzen. Caleb, how is it going today? Where are you jet setting on this lovely evening?
I'm in Dubrovnik in Croatia right now, home base here for the next week and a half or so, and then I'm off somewhere else. So staying nimble.
All right, so if you see him, any ATB fans, make sure you go up and give him a nice hello. And also, we have Forrest on. You can also see him at 0x Stacker on Twitter. One of the most famous D-gods, we feel like we're with royalty. Forrest, how are you doing today?
Doing well. How about you?
Doing well, doing well. All right, let's get into it. First, the SVB hearings and also Choke Point 2.0. Then we'll talk about the Chinese bribes and SBFs just being indicted. But the Senate Banking Committee, they're looking into the recent bank failures. They just had their first hearing today talking about the collapse of Silicon Valley and Signature Bank. The hearing, they have FDIC chair, Federal Reserve Board of Governors vice chair, and Treasury Department Undersecretary of Domestic Finance all in there. And they're making decisions that they coming in after the bank executives and the collapse of SVB and all the stock sales and all of the uproar we're seeing in the banking community. And as they're trying to stop the contagion, question remains, will they be able to stop the contagion? Now, Kelly, first Senate Banking Committee that just had the first meeting. I remember the 08. Maybe you remember. We're a little bit younger, but I followed it slightly. There was just a lot of posturing. I remember a lot of Senate committees. They seem more they're more entrenched about trying to get a good soundbite to pop up on the interwebs than they are about actually putting someone to the fire and actually having some real charges stem from this or any kind of responsibility stem from this. Are we going to see the same dog and pony show as we saw back then? Or in this politically charged climate, maybe people want to get some points on the scoreboard. We do have an election coming up as well. Will heads roll from these committee meetings?
Well, you know what? It's interesting. We look at the recent arrest of Do Kwon, and I'm not saying that I'm not going to say whether or not he should or shouldn't have been arrested, but as strong of a position, not only within our own government, but also other world governments, trying to track him down and now arresting him for the failure that was Luna. Look at what's going on with SVB, First Republic, Credit Suisse, Deutsche Bank, all these banks that are essentially doing the same thing that even FTX did. And FTX, everybody paints and I'm not saying SBF was in good light, but there's this sort of slanted focus, I should say, on the failures that happen within the crypto industry. And we're seeing it, interestingly, now play out. The systemic risk that banks basically unfortuitously have used that are now starting to cascade, and we're seeing these banking failures sort of not only happen within the U.S. but also in other parts of the world. And I don't even see a likelihood of any of those CEOs getting any sort of charges pressed or even having their bonuses that they sped up when they were getting paid out before the collapses. But so there's interesting sort of narrative there. I think it's all posturing. I think the money printer is going to just try to keep them elected in office by going burr and, perpetuating this terrible situation we're in, just kicking that can further down the road.
All right. Well, speaking of kicking the can down the road, we have two parties not accepting responsibility. Caleb, on one end, we have the regulators. We have even senators are mad at the regulators saying, this is from Senator Tim Scott. The warning signs should have been flashing red. But then on the other end, we have the bankers, and the bankers say, well, you incentivized us to make these long duration bets. You incentivized us, with the climate of 0% interest rates, and then just skyrocketed it in a 12-month period. So the bankers pointing fingers at the regulators pointing fingers at the bankers. Explain to me, like I'm five, who you think is more at fault, or is it just a equal 50-50 slice here?
I'd place a little bit more of blame on the Fed specifically. And, funny enough, when we got the minutes from the Fed's December meeting, we had even had them acknowledge risks that were in the banking industry, specifically interest rate and duration risk. And so, the Fed was already kind of concerned about this in the first place, after basically 9 months of one of the most historic tightening cycles in US history. I think the funny thing to me is, like, if we go back to November, December of 2021, the market was only expecting the Federal Reserve to raise interest rates by 2 or 3 times in all of 2022, starting in the second half of the year. Obviously, we know that that did not actually manifest the way that we expected, right? Because we ended up getting a much larger magnitude of rate hikes in a much faster period of time, much sooner than the market expected. And so banks, when they're allocating deposits to make investments, whether those are loans or actual investment decisions, the banks got blindsided by that as well, right? So, funny enough, Michael Barr, who's now the vice chair of the Federal Reserve, and he got appointed in July of last year, he was talking about how this was textbook kind of like mismanagement of risk. And he makes everything seem so obvious in hindsight. But at the same time, right, it's the regulators always come in the 11th hour, shut something down. The damage has already been done. And they try to make everything seem so obvious in hindsight, which, clearly wasn't the case. And so it's clearly a mismanagement on both sides, because clearly not every bank is facing the same mistakes and results of Silicon Valley Bank. But at the same time, the Fed also is considerably to blame here because of how significantly they tighten monetary policy.
Caleb, yes or no? Is this all a plan to just have us consolidate into 4 big banks?
No.
Okay. All right. I tend to agree. It seems pretty bad, but I'm sure the 4 big banks want that. I don't know if every politician might want that. And what about the other bankers? I'm sure there's some other people on the, the small banks also. Hey, my voice counts. All right, Forrest, I want to talk to you about, I tend to agree with Caleb. I'm putting a little bit more blame on the Fed's shoulders than I am on the bankers. And part of that is the loss of fractional reserve banking. I don't want to get into specifics, but, after Dodd-Frank and, going back long time, banks have had to have a certain amount of money given for every dollar that you hold. Forrest, you give me $1, I'm your bank. I can't just loan it all out. I got to hold on to a couple nickels worth, right? Well, I want to share this graphic. As of March 15th, 2020, the board reduced reserve requirement ratios to 0% as of March 26th. This eliminated all reserve requirements for deposits. Are we going to continue to have a fictional reserve banking, or are we going to move back to fractional reserve banking? And what kind of rates is it going to be at 10%? Is it 80%? Is it 1%? What do you see moving forward? Can we continue 0%?
The prior 10% was already pretty ridiculous. The whole like you can't be surprised when there's a bank run and the fractional reserve requirement is 0%. Like, you're not requiring banks to keep any money, and then well, how could we have possibly gotten a bank run if we don't require banks to keep any of the money that is deposited? Ultimately, I don't know what the Fed's going to do about the reserve requirement. If you would have asked me years ago if it would ever have reached to 0%, I would think that's absolutely insane. That's stupid. That's obviously going to lead to bank runs down the road. 10% is already ridiculously low. We see way stricter, like imagine if USDC, if the reserve requirement was 10% or 0%, didn't have to be backed. Like, it's not backed by it. There's no reserve there. The money doesn't have to actually be there. They can take risks with it. They can loan it out. And when you add in all of that risk taking into an environment where the Fed just will willingly prints a ridiculous amount of money in 2020 and 2021, and then has to try to put the genie back in the bottle by raising skyrocketing interest rates, it's no wonder that some of the higher, risk tranche, type banks are going under. This is like, it seems like a completely logical outcome to what the Fed's been doing over the last couple of years. So as far as like predictions for what they're going to do with the reserve requirement, I genuinely have no idea. I mean, obviously we'd like to see it go back up significantly, as depositors, but I mean, look, I think it's probably too late for that. I don't know if 10% is going to do anything for anyone at this point.
Well, I'm looking at the date and it says March of 2020. I can't really recall exactly, but I think, a lot of us were preoccupied with something else at the time. Do you think that more people are going to come to realize like 0% is actually what is held on these banks? And will the general public become aware, or is this still just for us tech nerds?
No, I think I think it's kind of psychological. It becomes a self-fulfilling prophecy. More people figure out that banks are not required to hold any of their deposits there, then that could contribute to a bank run. It's psychological in nature, and it accelerates. And it's exactly what we saw with SVB. No one wants to be the last person to withdraw their money and not get their money out.
All right. Yeah, the greater fool theory, somewhat. All right, let's talk about Choke Point 2.0. Here's a great thread that breaks it down by the Breakdown Report. I guess that's a good name. Operation Choke Point 2.0, the federal bank regulators come for crypto. Here's a summary. This law firm successfully sued the FDIC, the Federal Reserve, and the OCC over the original banking choke point by publishing negative and foreboding comments on banking crypto. Federal regulators violated the due process clause of the Fifth Amendment. They have exceeded their statutory authority, among others. It's a great breakdown. It just outlines all of the details of how they just continuously overstep their bounds, whether it's no clarity, whether it's enforcement through regulation or regulation through enforcement, I should say. We just see example after example here. Now, this is a Washington, D.C. based law firm, and they're known as the back war room of crypto. And a February tweet from Nick Carter was one of the original people that put this on people's radar at the time. Seemed alarmist. Now, fast forward, we're seeing all these different acts, whether it's recent stuff with CZ, whether it's stuff that happened months ago. We're seeing the regulators starting to clamp down. Now, Caleb, I want to ask your thoughts on Ethereum specifically here. We have CFTC. They're suing CZ, Binance. In this lawsuit, it's positing that, hey, Ethereum is clearly a commodity. And then we have the SEC. They're suing people. Hey, clearly Ethereum is a security. Is it really just going to be a finish line? Who's going to be to the end of the race first? And then this decides what Ethereum is. How is the end game going to play out for Ethereum and its ruling? Is it going to take congressional oversight? Is it going to take Gary Gensler? Is it going to take a CFTC, SEC court battle? How does this play out?
Well, I almost hope that there isn't congressional oversight into this, right? Because, clearly the different government regulatory agencies still can't make up their minds on whether or not it's a security or a commodity, and they're going to continue to contradict each other. So I think we'll probably need an official kind of like almost like final boss of a case or decision-making process in order to actually have some clarity on what's happening here. I think the surprising thing for me is that, despite this kind of inconsistency around the language of how Ethereum is described by regulators, we're still seeing the price basically at or near year-to-date highs, hovering just below 1,800. And so I think if you're an Ethereum bull, that has to be considered pretty good news, right? So, price is basically a forward-looking mechanism. And so the market has the ability to kind of weigh these odds of whether or not Ethereum is going to be considered a security or a commodity. And I think, there's a good chance. I mean, this is obviously going to be fueling a little bit more of a bullish narrative for Ethereum, because I know a lot of bears really kind of came out in full force when Gensler had called it a security before, or essentially said that as far as he was concerned, Bitcoin was the only commodity in crypto. And so this is an interesting kind of change of language, right? So we will see.
Bitcoin is the only commodity. Pax gold holders across the globe just shaking their head right now. Quick question, Caleb. Not so much a price prediction, but a macro prediction. Will we see a ETH flipping a Bitcoin ever?
Yeah, maybe in like 10 or 15 years. I mean, maybe sooner. I don't know. 50,
it's a possibility.
Chance,
All right,
we'll
possibility. See. Not ruling it out. Well, Kelly, they outlined 5 tenets, and I wanted to reiterate on the 5th one here. Why are banks being recommended to steer clear of crypto, and those who have been successful in embracing it are being closed down? Why is crypto being shuttered out at the same time the Fed is working on a digital payment platform? I'm just going to ask you the same question here. Why is crypto being shuttered out while the Fed is working on their own crypto initiatives in the background? What is the reason?
I think this is a critical point. Everybody needs to understand. All of us that are tuned into this channel here at Around the Blockchain, whether it's the first time, only time, last time, doesn't matter. If you're at all interested in crypto, we have to field these questions with all of our friends, families, neighbors, anybody as we bring up these topics, and maybe they're on the other side of the fence. And that is the fact that a lot of people don't realize that while that we're trying to debate what the regulatory clarity is going to be or come to for crypto, the crypto ecosystem, whether it's Bitcoin, Ethereum, Litecoin, Cardano. I think the bigger point here is it's leading back to what Caleb Franzen just said. The fact that Ethereum or any of the assets are holding up as they have with all this uncertainty speaks volume about the immense and overwhelming utility that investors do see going into the future. And in addition to that, one of the things that I think is going to slowly become apparent, and because it's immediately obvious and apparent to anybody that looks into crypto for more than 9 seconds without a banking bias, without a government bias, blockchain is essentially immediately transparent as fast as blocks print. And so one of the biggest things I'm excited about inside BitLab Academy, we have all these new courses coming out. My favorite course that I'm excited about is the on-chain data course, because it shows you the ability to look into these things. So the argument about transparency, the argument about what needs to be regulated, all these things to me are they're just so sideways. They're not thought through because there's ignorance surrounding the regulators that are trying to look into this. It's either ignorance or more so, it's actually much like the tweet you just pointed out, DZ, has to do with lack of due process and giving a fair shot to the beauty that is blockchain, Bitcoin, and then all the other utility comes with other blockchain protocols. And so I think it's more of a shot. What you're asking is, I think this is more of a shot at trying to slow down the systemic shift, slow down the systemic narrative of people moving and becoming aware of how safe their assets can be with good, of course, risk management and healthy custody, self-custody that blockchain provides. And it is an immediate and incredible threat to banking if everybody were to know that today and just put their money there. So on the one hand, we want things to migrate there. But if we really think about how things are tied together globally, we do need this to be a gradual shift so that economies, don't just cascade in a direction that we don't know how to navigate, because we do need to have the fiat system for a little longer. We don't need to shift out of oil immediately. All these things need to take time. And I think that's going to become apparent and naturally be the case over the next 10 years. So I think everything's right on track. We just need to be patient. Regulators and governments are going to become more aware of the transparency and the lack of regulation that's needed for blockchain. The regulation needs to be lying more with centralized institutions like FTXs or even Coinbase or anything. The centralized bodies, not the blockchains themselves.
No, I would definitely agree. I think it's a slow down the flight from the dollar, and now it's just happening in the digital realm. All right, final question on this topic, Forrest. We have these string of frivolous lawsuits. Yes, I'm going to call them frivolous. I'm calling the SEC lawsuit frivolous. I'm calling the CFTC lawsuit frivolous. The NYAG lawsuit is frivolous. I'm saying they are all frivolous and silly and make zero sense. Is this a good thing or bad thing for crypto, all these lawsuits? On one end, it's a little bit of a marketing tactic. On the other end, it almost makes us seem embarrassed. We're immature. Even the Wall Street bets stonks crowd are laughing at us because we can't get our you-know-what together. Ultimately, is this good or bad in the long run?
I mean, look, these little small battles in a greater war over controlling the money and controlling the media, which I'll get into in just a second and kind of expand upon that. Maybe with the CFTC and the SEC, we could get some clarity. Maybe the CFTC, they finance, but in the process, they establish some precedent for Ethereum being a commodity versus a security. But then in the grand scheme of things, like, no, these are just little tiny individual battles. These court cases, the CFTC, the SEC, that they're just trying to slow down the adoption of crypto. I agree with Kelly here. The powers that be, they want to control two things. They want to control the money and they want to control the media. If you control the money, you've got a better chance of being able to control the media. But both are just equally important wars that are waging. Like people trying to control the media. All you hear about recently is the Twitter files, censorship, TikTok, people being removed for this and that. They want to control the money. The IMF has come out and said that crypto, if not regulated properly, poses or undermines and poses a threat to the traditional financial system. Like that's exactly true. They hit the nail on the head. That's supposed to, because the current financial system is completely and utterly broken. But guess who controls the current financial system? The powers that be, right? And they're going to do everything they can to slow down the adoption of crypto because it is complicated technology. I don't believe that they'll be able to ultimately stop it, but they're going to try to slow down the adoption of it so that they can wrangle control of it and regulate it in a way that best suits them to remain in power. I mean, these little skirmishes, like you can pick them apart all you want, but ultimately that's what's going on. They're just trying to slow down the adoption of crypto, and they're controlling this narrative about, oh, crypto's bad, crypto's risky, crypto this, crypto that. Don't go into crypto for this reason or another. And ultimately, all they are trying to do is wrangle control over money. They do not want to give up control of the money.
Is paper money dead? Yes or no?
Not for a while.
Not for a while. All right, let's go on and talk about SBF. Yes, he was indicted. I actually tweeted about it. He was charged with $40 million bribery charge of Chinese officials. Here's just a quick breakdown. Early 21, CCP froze Alameda's trading accounts on 2 different Chinese exchanges. After they were frozen, SBF and company tried legal means and lobbying efforts to free up I think it was roughly around $1 billion. After months of failed attempts, they tried a multi-million-dollar bribe to unfreeze accounts, after which $40 million was transferred from Alameda to a private wallet, and then that account was unfrozen, and then they authorized the transfer of tens of millions of dollars more there. Conspiracy, here's some of the charges. Conspiracy to commit wire fraud, conspiracy to commit derivatives fraud, conspiracy to commit securities fraud, and then, of course, securities fraud. Oh, wait, there's more. Commit bank fraud, unlicensed money transmitting business fraud, commit laundering, and make unlawful political contributions there. They're saying he violated the Foreign Corrupt Practices Act, makes it illegal for U.S. citizens to bribe other officials of other governments to win any kind of business or favor there. A lot to unpack here. Now, Kelly, we're not legal experts. I'm not going to say, what does this mean for his case? But what does this mean for the public eye? He already, he's already seen as the mini Madoff. Maybe had a little bit of goodwill with his effective altruism. I think a lot of people see between the trees when it comes with that one. Is it just totally done for him? Is this another chapter for the story? What are your thoughts when you heard all this? I mean, does this mean lifetime in jail in a dark cell?
You know what? I don't know. I think it would be more likely due to the fact of his tie to crypto than due to the fact of his practices, his business practices. Because if we're really honest here, I think SBF was a little caught off guard with how in trouble he's gotten through all this. Because in reality, what he's done is taken the playbook of all traditional banks. Which is why when you look at this, Deutsche Bank, and then you see Bitcoin. Why is money flowing into Bitcoin? This is exactly tying back with what you asked earlier. It's because the narrative and the establishment over the decade of Bitcoin is starting to show that it is an alternative safe haven for capital. And because of that, then we tie this back to what your question is here about SBF. I think it's more likely that he'll face jail time because of his large or his heavy sort of tie with the crypto ecosystem, and they're going to tie negative FUD around the crypto ecosystem with SBF's failure and also with him potentially going to jail. But the question still remains, back from my first answer all the way at the beginning. Are we going to see the CEOs of Credit Suisse, Deutsche Bank, First Republic, I mean, the list goes, Silicon Valley Bank, Silvergate, there's all these traditional finance institutions that were basically using the same playbook that FTX was. So will he go to prison? I think it's more likely now, especially having these ties that it's harder to navigate out when you have these sort of foreign interference and foreign funding narratives. But then I don't want to make this a political show, but then this also begs a question: why do corporations have such an ability to impact investments? I'll call them. I won't even call it contributions, but investments into various different political, whether it be organizations or individual political party members. Every corporation out there should be limited at the same amount as any individual. So all these things are tying together, and it's a very interesting time, global economically and geopolitically, because we're still facing this is going to be another 10 years that we're dealing with a lot of the systemic issues that came out of the global economic shutdown in March of 2020, and how the Fed is even thinking about what they should be doing. I do have compassion for them in that regard, because how do you look at a historical chart and historical analysis as to what you should do and how it should be affected within the economy when we've had no situation like this? So in terms of SBF, yeah, I do think he needs to go to prison, but I think they need to tie that to some of these other banking and traditional finance individuals as well. And we talk about clawbacks at Celsius. Let's get some of those bonus clawbacks from some of the CEOs in these TradFi institutions as well.
You said, historical data from these charts. Those charts that you just showed, was that not the 1 minute chart?
No, this was these charts.
Oh, okay. That just looks like my trading view.
These are 1 day charts, if you can believe it. I mean, it's just crazy. But you know what? Everybody just needs to remember, zoom out. I'm going to throw this chart up here. I'm just going to say zoom out. Look at this is a Bitcoin trend within basically fib extensions of the realized price. We're setting up. We're still on the 4-year cycle. We're looking right here, just below this bull floor control band, which is very similar in 2015. I think this, as we see this sideways action, everybody's calling for this massive pump right now. I still think that there's still a likelihood that a lot of people are forgetting. With all this FUD and all this stuff, we need to really sometimes look at the charts and be okay with it not just being up and not just being down. We very well could have a sideways period of price action right now, which would be the most healthy, in my opinion, to shake off this FUD and build that floor so we can look to the next bull cycle.
Yeah, just not healthy for my bag. All right, now, Caleb, I want to talk, here's some of what he's currently experiencing. He was charged. He's now confined to his parents' home in Palo Alto. His revised bail conditions says he can't use most electronics apart from a phone with no internet capability and a basic laptop with limited functions. One must assume no League of Legends on there. Also, that laptop has monitoring software to track his user activity. That was because, he was allegedly tampered with some witnesses here. He's being treated with kid gloves, I might say. I don't think that's unfair to say, given the scope of his crimes, the fact that he could just hang out at his parents' mansion in Palo Alto, maybe doesn't seem fair for someone who a $20 shoplifting charge is in Rikers for months at this point. So, maybe a little inequity there. Given that, what do you think he'll be treated as once this all, comes to the main trial? Is he going to be given a slap on the wrist due to his connections? I mean, he's in a nice posh home at the moment. Is he going to be made a scapegoat because of his political enemies, especially those maybe on the right? Or, call me crazy, will the justice, branch work as intended?
I tend to have faith that it will work as intended, but, fully accepting the fact that, I love the way Kelly just put that, talking about these investments into the different political parties, not necessarily contributions. That's a good way to think of it, Kelly. So I definitely appreciated that perspective. It's funny because when you were reading off the different things that he's being tried for, in my mind, I was just thinking another day in the Bahamas, it's like all of these different things about like conspiracy for fraud and all this other stuff. It's like, dude, we're still going to be finding out about stuff over the next several months that really took place, I think. And I did this tweet back in November when all this stuff was unfolding saying, look, we are far from the dust being settled on this. And we're going to find out details that, we couldn't even imagine right now over the months ahead and maybe even years, right? So we'll see how long this trial even takes place, and how long it takes to get an actual resolution and the details that come out as a result. I tend to be an optimistic person, so hopefully justice is served.
All right. Hopefully. Yeah. I'm going to be optimistic too. You're optimistic. I'm going to be optimistic. Now, Forrest, I want to talk to you about the ethics and the morality of, the situation that he found himself in. This is an international crypto exchange. Let's just say we all use, I don't know, the Forrest exchange, right? We all, Forex, I guess you could call it. It's a catchy name. Maybe use it. So we all use it. But then all of a sudden, the world's most populated country, the number 2 economy, probably going to be number 1 fairly soon. They freeze $1 billion of your crypto, $1 billion worth of your crypto. You have someone message me, hey, they're messaging you, hey, we're connected to the government. You give us $40 million. We're going to unfreeze not your funds, your customers' funds. Is there anything wrong with paying someone $40 million to make that happen? Was what he did wrong? What would you say?
Look, if you had a blank slate and was completely otherwise innocent of all crimes,
Good point.
and he was like, squeaky clean, had only ever looked out for his customers and was trying to get that billion back on behalf of their customers from a government that sees, maybe we could entertain that and maybe we could have a different outlook. But ultimately, the guy does not have a squeaky clean track record. He's hopefully going to go to prison for a very long time. So no, I cannot imagine that it can be viewed in a positive light at all. Like, was he going to get that billion back and give it back to the customers? No, probably not. He was going to get that billion back and funnel it through Alameda Research or wherever else he was pushing money to, and to continue to defraud his customers. So no, I don't think. There we go. There's this evil SBF.
All right. Well, let us know in the comments, chat. Was it wrong that he paid $40 million to unfreeze the customer's assets? Some are saying it's not the customer's assets. Those are going straight to the politicians. Let us know. Let us know in the comments. I think that is all we have time for today. It was a close one, and Kelly ended up taking it home. I think it was that extra spiel about Bitcoin at the end. You ended up squeaking past Forrest and Caleb there. So, Kelly, feel free. Leave us with some parting thoughts, please, sir.
Well, first off, thank you for always hosting the show, DZ, and the whole team at the Hit Network there for bringing the around the blockchain together. I just want to shout out everybody that's on the panel. Make sure you're coming over here, following at ATP Daily, follow at DZ_BTC, follow at Caleb Franzen, and follow Forrest, which is at OxStacker. And if you haven't yet, check out our morning stream for BitLab Academy, which is over here, youtube.com/@BitLab Academy. And check us out, bitlabacademy.com. Other than that, everybody just stay patient, have a plan, have patience, and you will have profits in the long run. Sit on your hands if you're an emotional trader. The market will naturally come back in favor of your plan if you're just a little bit more patient. So big love to everybody. Thank you for having me.
And 0x Stacker, I had to pay the price. Now you have to pay the price. Those dang Ethereans. All right, that is all we have time for. Make sure you hit that like button. Like Kelly said, go in the description. Check out everyone's links. Make sure you follow their content. It's always great stuff. Until next time, we'll leave you with SBF.
Bye-bye.